Let's talk about Wells Fargo first. It's the largest US bank by market capitalization, I think. That would, of course, change. Maybe JP Morgan is larger. It's probably also the largest by assets or branches, and it's a very large organization, combination of West Coast-based Wells Fargo and Wachovia. So it's a big leader in all of the traditional banking, and it's very US-centric, headquartered in San Francisco. Market capitalization, $252.86 billion. Trades on a price-to-earnings ratio of 11.94, so that tells you fairly low. Dividend yield of 3.11%. Okay, Rowan, so I picked this one because I own some. I've got an account with them, and they seem like the least adventurous of the big US banks and the one which has potentially got the most upside, but I don't know. I'm looking for your view.
Yeah, I think that's a fair comment, and really I think it's got Warren Buffett and Berkshire Hathaway as an anchor shareholder, and I think obviously that's a clear stamp of approval. And in his recent AGM, he said he is lukewarm on banks generally, but obviously likes Wells Fargo still with a 10.4% holding and Bank of America. And I think you're right, it's focused more on its core business, focused on its domestic market, has a strong presence there, a good market share, a very large branch network, and in terms of the global financial crisis, was less caught up. Some issues around mortgage lending, but much less so, much smaller fines than some of the other banks.
So they weren't rigging the LIBOR rate, they weren't sending each other rude messages about rigging the Forex market, they weren't involved with that sort of thing. They weren't like doing complex bond structuring and mortgage-backed collateralized security type stuff, none of that sort of thing.
Focusing on banking to consumers and corporates.
So explain to me, why is the share price sagged so in 2015, 2016 as interest rates haven't risen in the US? Do interest rates need to go up? What would that do? Would it fatten up their margins? Why are they languishing as Janet Yellen has remained at the sidelines?
Well, I think as we've mentioned, there's is a lot of pressure on the banking sector overall. Because of the regulatory increases and the capital requirements. That's just, as we said, putting a lid on all banks' ability to generate returns. So that's part of it. The US economy hasn't been growing as strongly as people expected, hence the low rates. And there have been some issues in the exposure to the oil sector, as we've seen the oil price come down. So that's
one thing I must just point out is that I assume one of the ways of cutting costs and dealing with the regulatory burden is to use technology more cleverly. Wells Fargo and the US banking sector generally is not particularly technologically advanced. The South African banks have better systems. You know, they still use checks. You can't do online payments. There's a lot of things they could do, branches and otherwise, and moving people out of the branches, which would really, I think, improve their margins a lot.
Yes, certainly they could leverage technology. I think the issue is they've got massive legacy systems and a legacy base, including, a very disparate branch network. So whereas it's maybe more homogenous in South Africa and the ability to move is easier, I think it's a long-term play, but that's one of the on the tick side, compared to the
So it
negatives.
sounds like it's a fairly modest positive. I mean, how are you going to call it, hot or not? Would you buy these now? I mean, I feel a bit biased because I'm a customer of theirs, is where I bought the shares. I don't know, it's not a very good way of going about it.
This is a call on the banking sector, and it will move in line. This is probably better in breed. I'm not that positive in the banking sector in the short term. I think there needs to be some more restructuring, cost cutting before I get a bit more positive on the global banking sector.
So you're not expecting earnings fireworks for now. Okay, so you're going not hot. Okay, I'll lean hot for the reasons mentioned.